The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it's just settled on Thursday's trade action. We saw that the wheat market was the upside leader in grains, corn up a little bit, soybeans, though, under some pressure, and mixed activity over in the livestock arena. Here to talk about things and provide us with perspective and market analysis, we welcome in Brian Doherty, Senior Market Advisor at Total Farm Marketing, joining us here on the show today. Brian, Happy New Year to you and yours. Good to talk with you again. Thanks for joining us.
Jesse, Happy New Year. Thank you. Great to be here another year.
Yeah, and another year, and not much in the way of changes in terms of some of the main drivers in these markets, even though we rolled over to 2024. A lot of things still kind of carrying over that we saw in December here at these grain markets. Let's start, though, with the winners of the day. Wheat and corn kind of following along with wheat as well. I know you were mentioning to me some chatter about cold weather in Russia maybe having an impact here, and a few other news items maybe giving us a little premium back in these wheat markets on Thursday, Brian.
Yeah, so a couple observations there. You're exactly right, Jesse. The first of the year didn't bring about this, robust buying that I think some people were hoping that we'd see after a sluggish end to the 2023 calendar year. But you've got some weather that's starting to come back into the weather market, I think, here toward the middle or latter part of this week. Remember, the markets were closed on Monday, and that's really cold temperatures in the Black Sea regions and up in the Russia. So there's that. There's talk of maybe some export activity and some business, but we had a pretty good turnaround today. And I'm not sure I got all the dots aligned as to why, when you have a close to about 23-cent trading range, why it finished right near the high of the day. So there might be a little more to it, the story, or there might be a little bit more emphasis on the cold weather that it seems to be European, the whole European kind of window, Russia window, Black Sea region. And there was also talk today that Russia still seems very disinterested in talking about renewing the corridor.
Yeah, and that's another thing to keep an eye on as well. And I wonder, too, if maybe I'm crystal balling a little bit here, but we've got a lot of shipping challenges around the world, and particularly in the Red Sea and the Suez Canal, and wondering if that's maybe having a little bit, starting to show itself in markets and having some more impact there as well, just with some of those shipping challenges, not able to move much of anything through that Suez Canal region here with all the turmoil in the Middle East right now, Brian.
It certainly doesn't take a very vivid imagination, and it kind of goes back to like when the war started with Ukraine and Russia. Just you start connecting a lot of what ifs, and well, what if it can't ship? And where's the supply going to come from? And does the U.S. Capture some of that? You look at our drought monitor map, still pretty nasty in the U.S. So just looking at all those things, you kind of look at commodities and they're pressured. And in particular, I'll kind of segue into soybeans again, down today. Looks like the managed money continues to sell technicals, sell the trend, idea of rain makes grain. Probably some improvement in conditions in Brazil for sure, but is it enough to drop prices? Poor technical picture. So continued difficult situation if you're bullish beans, because it's kind of relentless here. It's almost day after day. So big picture looking a little bit more challenging for sure.
Yeah, and like you mentioned with South America there with soybeans, I think that's the main driver until we get something else in this market or some other news here. So that's what we're watching. On the corn side, Brian, technically, what are you seeing here as we start off the new year? I believe, I want to say yesterday, we made a new low in March corn at one point in the trading session. I wonder just what you're seeing chart-wise here, if anything is different technically here as we've rolled the calendar over to a new year.
No, it's not. We're in a sideways to lower pattern. The March contract over the last 15 to 25 days wasted a little time giving up what looked like supportive, maybe trade activity, and just gliding down to where the December contract now has gone off the board. So we're not seeing any change. December went off the board about where September went off the board. So there's a glut of corn out there compared to a year ago. The end user knows it. You've got higher interest rates. You've got this idea that the end user is likely going to allow farmers to pay to hold it. Why would they chase it? So week to week, there isn't a sense of urgency or pain that the end user has to jump in there and get things bought. And that's just kind of where we are time of year. Add to that the last couple of weeks, really this idea that the weather conditions in South America certainly could affect some of the bean, if not maybe a lot of the bean crop. And there's certainly private estimates out there who are taking the Brazilian crop down to the low 150s versus 165 where it started this year. You can't quite, I don't think, argue that that's necessarily going to have big impact on safrinha corn. Weather for safrinha corn will have impact on safrinha corn, not necessarily a delayed planting, late planting, or whatever. But it does, it does conjure up some vision that late planted corn is subject to more what we term adverse midsummer weather in Brazil.
I know with it being a new calendar year, we've heard some farmers selling happening, especially with good weather this week. There is that opportunity to move some grain to town, but some of that I think is necessitated farmers needing some cash flow, saying, "Oh, I got to make some sales here to start thinking about paying for inputs for the upcoming crop year, etc." So I guess risk management wise, what do farmers need to think about if they have to make some sales here in this window in the early part of January, thinking ahead to the 2024 crop? Brian, what would you tell folks risk management wise right now?
Yeah, great questions. And there's no easy answers right now because of where price is. If it were a different level of price, it's a lot easier. You could just say, well, there's risk. Let's move it. Let's generate the cash flow. But we're at a lower level. And so the key word might be what you said was have to. If they have to make sales or core bins or do what they do, then maybe they retain the ownership back on paper, do so with a fixed risk, and just position yourself for the next 6 months in front of the market. I know today, as I look at the market today, I really don't see any urgency for a buyer or a speculator to come in here and scoop it up. Well, that's today. What do I know what the safrinha corn crop's going to look like in 100 days from now? Could be a full-blown weather market. So kind of that balance is where I'm getting at. If you sell the stuff, if you feel you've given it away too cheap or it's too low, reinvest a portion of that, go back into the market. You would have held that corn anyways. Again, we use the words have to. As we look ahead to next year, we're toying with $5, now a little bit below $5 on December corn. Kind of make sure you get a grasp of what that looks like if, in fact, we raise the carryout next year. And there's a chance that happens. And that probably means $4 board price for corn. So at some point, the question is, you're into January now. When do you not get started on some new crop activity in some capacity? It could be a hedge to rye, could be a short futures where you have a lot of flexibility to move in and out and not obligated to deliver cash. It could be an option strategy where you buy a put, sell a call, maybe sell a couple of calls, collect premium to finance that put. So there's a lot to talk about. There are no easy answers, but that's why we talk about it.
That is why we talk about it. And I know you and I will probably talk much more about this next week, but we got a pretty big USDA report in front of us on the 12th. And I wonder, too, some of this risk management. I think a lot of folks going to have to look at some different things here ahead of this report, Brian, because as we know historically, the January USDA report is always full of surprises, very volatile to these markets as a whole, isn't it?
It does. And let me back up just a little bit. We're at a point in the year, Jess, so not to change the subject too hard here, but we're at a point in the year where we have a vision and maybe a path of how things might go. Volatility, I'm looking at some analysts and reading, they're kind of looking at all these different sort of world events and taking into account weather. And a lot of it ends up on cash flow, or money flow. So the money flow has been basically defensive commodities right now. It's early in the season. Things can change. Things can happen. Weather can be a big part of this. So whether you're in the cattle business or you're in the corn business, think about marketing and balanced approach and the right tools, right place, right time, have good conversations. So it's kind of my message this year is to really, I've had a number of farmers say, gosh, last year, with hindsight, it's pretty easy. We had some pretty good prices to work with and really didn't have to think too hard. They're thinking really hard right now.
We are talking today with Brian Doherty, Senior Market Advisor at Total Farm Marketing here on Market Talk. And Brian, great thoughts so far. Let's talk livestock. Cattle started the week really good, and we kind of drifted here the last couple of days. Your thoughts in this cattle sector here as we move into the month of January? That last cattle on feed report was pretty much as expected. I guess I'm looking at this market moving forward, wondering if we're looking for another leg higher potentially here or not. What's your thoughts on cattle right now?
I want to believe that I am. I want to think that we've had good disappearance over the holiday weekend and that the consumer, we're pretty tight in supplies. It seemed like, from the reports I read that there were cash inventories and we've worked through cash inventories. A little disappointed the market didn't, ricochet up, go straight upward here. But as I look at, let's say the front month cattle here, and I look at the February contract, I see a contract that's really holding together kind of well, reflective of stronger cash. As an example, this February contract was down in the low 160s, around 162 here about 5-6 weeks ago, and we're holding closer to 171 right now. Up against some Bollinger Bands and moving averages and things like that. But when I look for corrections in this market, I still think you've got quite a ways to go, particularly on that April contract up to 182, which is about another $8 higher. I just, again, want to reflect back on you don't run tight on inventory for a long period of time and all of a sudden grow inventory a lot. You do diminish demand, and you do maybe have some ebbs and flows depending when the calves went into the feedlots or you take them out. But I still think you're looking at a very tight beef supply situation. Probably the problem with beef isn't beef so much as it is maybe on pork. There's plenty of cheaper pork substitutes that the consumer may shy to if they're concerned about their dollar.
And two, with the pork market, hogs have just been dismal through the fourth quarter of the year. And so looking here at the beginning of this year, I know hog producers trying to find something supportive. We had a bit of an update Thursday, but even then, that market is churning around down here too. As you look at the big picture of this protein sector, it's kind of a tale of two different markets here, really, Brian.
It is, and it's been on this kind of goal for a long time that is tightening cattle supplies in 23 and increasing hog supplies in 23. And then you have this downtrend in hogs and new contract lows here posted 2 days ago. Good upturn in February today, maybe a sign that the cash market's going to kick it in a little bit here in the next several days. I still don't see, at least on my horizon, both for cattle and hogs, I don't see any like big winter storms that really concern us about movement and weight gain and those type of things. It is January. We'll get storms, I think, but it's generally a good mild winter for weight gain in cattle and for moving hogs. So we just don't have that weather market right now here in the U.S. at least.
How about the dairy side of things, Brian? As we flip the calendar over to 2024, I'm guessing more of the same that we've been seeing in this dairy market. Any notes there for us today?
Just a perplexing, incredibly soft cheese market. We would have expected that to show a little bit more resiliency into the fourth quarter and new year. That hasn't been the case. East Coast is said to have plenty of fluid milk that might be starting to diminish a little. That kids go back to school after the holiday here. But again, it just didn't seem like for whatever reason or reasons, just can't put our finger on it, why the cheese market just didn't have a more robust showing here in this fourth quarter. It may again, when we talk about beef and tight supply, maybe it's providing support, but even cattle had a pretty hard turn in the fourth quarter. Maybe it's just this, consumer spending money on, let's call it Christmas and higher interest rates and just not chasing some of the, I'd call them better food items between cheese and beef. And it's just tough. So the dairy producers looking at tight margins right now. A lot of the defensive posturing that may have benefited the producer, those may be sort of running out of gas here with the front months where they're priced. What I would want to point out, though, is you've got your deferred months still above $18, June all the way through the end of next year. At what point, as a cattle as a dairy producer, do you not really defend some of that? I think you just have to look at that as, a rational reason to be a defensive minded and in posture defensively into those deferred months.
Brian, good stuff as always. Final thoughts, anything you want to mention or reiterate here for folks before we wrap up today's program?
Yeah, so farmers have been around a long time. They're resilient. We've lived through some of these tough pricing windows here. Things do and can change. So, the old saying, "Early word gets the burn," or early word, early bird gets the worm. Maybe it's more just being more prepared, kind of being realistic. I think it's a challenge right now. But look, don't leave a stone unturned. Looking for advantages, and tighten the belt and keep talking to people in your what I'm going to call your success circle that can help you achieve your goals, so that they do so in a manner that's productive.
Well, Brian, if folks want to reach out to you and ask some questions and get advice there at Total Farm Marketing, I know they can reach you many different ways. How can they get a hold of you, Brian?
I think, Jess, if I could encourage it, a phone call would be number one, 800-334-9779. So let's start with that. And then I would encourage an email, Brian with a Y at totalfarmmarketing.com. Or if you just want to read something, take a look at our website and got a lot of good resources there for you.
Well, fantastic. We appreciate the time as always. Brian Doherty with Total Farm Marketing. Thanks for joining us, Brian. Have a great weekend. We'll talk to you next week.
All right. Thank you very much. Have a good day.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.